Good morning, everybody. Thank you for joining us for this fantastic session on the economic cost of climate change, obviously an issue that we are all really concerned with. My name is Susan Goldberg. I'm the editor-in-chief of National Geographic magazine and our online news division. Let me introduce our wonderful panel here. Down at my far right, we have French Ambassador to the United States, Gérard Araud, and he is very concerned about climate change. He's specifically focusing on the 2015 Paris talks, which will be held in November and December later this year. And he said he believes that climate change will be the defining moment for a world mobilization around mutually agreed goals. To my right is Amy Christensen, who's the founder and CEO of Christensen Global Strategies. She works with businesses on developing green strategies. And she says, I've chosen to work directly with these corporations and investors, even recognizing that many have been polluters of our past and present, because without these partners, we're missing the majority of the global economy. And the sooner we support them in their efforts, the better off we'll be. On my left is John Cochrane. He has got a well-known blog called The Grumpy Economist. He's a fellow at Hoover Institution, a scholar at Cato Institute, and a professor of finance at the University of Chicago. And he believes that people need to face up to the real price of using carbon, and that too much of the discussion is about the policy of it and not enough on the cost. And finally, down at the end, Mark Tersick, President and CEO of the Nature Conservancy and a former partner at Goldman Sachs. Mark believes that environmental groups rely too much on fuzzy science and fail to really harness the power of the markets. And he thinks that nudging big corporations into a green direction will pay off better than making more land protected. So I wanted just to dive right in here with a quote that I thought was really interesting. This is from John Holdren, who's currently an Obama science advisor. And he says, basically, we have three choices: mitigation, adaptation, and suffering. The question is what the mix is going to be. The more mitigation we do, the less suffering there will be. So let me start with you, John. What's the right mix?
Well, I'm the economist on the panel, and I think the answer to that question is you have to take a hard-headed look at the dollars and cents of it on how much is the suffering going to cost and how much does the mitigation cost in order to get there. And I think we need to face some of the hard realities of this. The economic consequences of climate change are big, but they are not, so the best guesses are not as big as often thought, so that losing percents of GDP in order to mitigate may not be as wise as some of the other strategies. Well, but Mark, let's just keep a price on it.
Do you agree with that?
I agree. It makes sense to take a hard-headed look at the costs and all that. I agree with the happy environmentalist agrees with the grumpy economist. But I think John's a little quick to say these costs might not be so great. There are, what do we know? Yesterday, the Secretaries of Treasury here, the Risky Business Report talks about hits to agricultural productivity in the range of 10 to 20% in the next, say, 10 years. Huge hits to labor productivity. Permanent costs of something like $100 billion from coastal flooding. Annual costs on the order of $8 billion from coastal storms. Those are costs that people are pretty confident about in the U.S. But then on top of that, we have lower probability but catastrophic outcomes that you can't dismiss. Disintegration of Greenland, reversal of these weather patterns, et cetera. And then on top of that, of course, I'm an environmentalist. Enormous impacts on nature that we feel morally responsible for protecting for future generations. Things like biodiversity. You lose biodiversity, it's gone. And then what's interesting to me is the costs to address this don't look very high. That's what puzzles me about all of this. A carbon tax, and there's a bunch of models out there, but Brookings has a model that talks about starting with a carbon tax of $16 a year now, growing 5% a year till 2050. And the initial costs are would be something like 16 cents a gallon or $10 a month on an average utility bill. These kinds of fluctuations are within the noise of our markets all the time, and we're okay. And that kind of carbon tax would point to huge reductions in emissions by the order of 33%. It'd be a huge step up in efficiency because people always compare a carbon tax, those who don't like it, to doing nothing. But we have this plethora of all these command and control regs, subsidies, renewable portfolio standards, you name it. That all could go away. Those are taxes too. They're just invisible and inefficient. And then if the U.S. acted powerfully, it's, I think, very likely to expect people like China to follow. And that I want to comment on. People always say, wow, China will never act. No, China's acting, and they have to act. If you go to China right now, it's like impossible to live anymore in China. They're not going to have a society if they don't deal with local air pollution. And those causes of pollution are also sources of carbon.
Well, now, Mr. Ambassador, you expect some agreement in Paris at the end of the year from the Chinese. But what about some of these other countries, India, Brazil?
No, you know, when the French president decided to host the COP21, you know, in December, we were devastated. You know, basically the bureaucrats were devastated because all the odds were going into the direction of a failure, the way we had a failure in 2009. But actually things have really dramatically changed. You are speaking of the States, which is obviously important, and I agree. What has been agreed between President Obama and the Chinese is really historical. You know, really, people can say, oh, the substance, they are not taking such a commitment. But for the first time, actually, the Chinese are entering the field saying, we want to, we are serious, we want to, we recognize that there is a problem. After that, you have most of the countries are worried about their future. The enclave countries, the small island countries, you know, so there is no, the G77, which are 132 countries, usually were opposing what we were trying to do. Now it's not anymore the case. We are not yet there, especially with India, maybe Brazil, but we are moving into this direction. But maybe I will come back later on that. In Paris, it won't be only the States, you know, really, because now everybody has understood that it won't be decided only by the States.
So yesterday, Secretary Paulson, in his luncheon panel, said that governments were really good at acting on a local crisis situation and really bad at acting on a global slow burn. So what are you seeing from a business perspective that businesses are trying to do to take control of the situation?
That's exactly what's happening, and that's why I think we actually have some of the governmental momentum that we're seeing. And why is China leading? Why is the United States stepping up increasingly on this issue? It's because that economic calculation has shifted. So it used to be back in 2009 in Copenhagen, it was about governments saying, you're to blame, you have to do the most to reduce emissions. Now it's about competing for that economic opportunity in clean energy. This is what shifted the calculus for everyone, for governments, for businesses. Coming out of Copenhagen, the CEOs of Duke Energy, Dow Chemical, Coca-Cola, and the Mexican conglomerate FEMSA got together and said, we're going to Copenhagen at the opening day and we're going to call on governments to get an agreement together. They wanted an agreement, and they couldn't have been stronger in their language at that event, talking about a war on carbon, talking about pricing carbon, and why it was good for their business bottom line to save money, to drive innovation, and to benefit their brands, all of them. And that changed the conversation with governments in that conversation in Cancun. It started the momentum towards where we're going in Paris, because they actually came together with an accord and a roadmap towards Paris there in Cancun. It was thanks to that business leadership and investors, traditional investors now moving into the sector. Just yesterday, I had a very senior investment banking official from JP Morgan come up to me and say, I'd like to talk about you're investing in clean energy. We're increasingly investing in project finance of renewable energy projects. It's an economic opportunity. We're seeing 15 to 20% returns on those investments, and increasingly the dollars are doing the talking for us. So governments tend to follow, and business and investors are leading them.
From an economic perspective.
Well, could I just go back for a second? Because we had a moment of breakout of sudden complete agreement.
Oh my God,
that I
right.
think is worth highlighting in both of our introductory remarks. So a uniformly applied carbon tax or carbon price. If you emit carbon, you're going to pay 16 bucks a ton, 50 bucks a ton, I don't care what it is. Everybody who emits carbon pays that price. That induces the technical change, that induces you to use less carbon. And we trade that, get rid of the very ineffective regulations. We want the most carbon reduction per buck. And that is the only mitigation strategy that I think has a chance of working. And as an economist, one that works efficiently. So I think total agreement broke out on this side of the panel, and I wanted to cheer that if I may. Okay.
So do you think that we could get total political agreement to come up with some sort of a strategy that would allow that?
We're getting closer than you think. If you read the headlines and you pay attention to our elected officials in Capitol Hill, you can be discouraged. But if you just peer in a little closer, there's agreement. I was telling these guys, the Heartland Institute, maybe some of you attended, they had a recent climate event. The Heartland Institute has been the red-hot center of skepticism. But there, I'm told, the vast majority of scientists at the Heartland Institute agreed climate's changing and human activity is a significant part of it. Then you have people like Jerry Taylor, who used to work for Cato. You probably know him, writing really compelling papers, The Libertarian's Case for a Carbon Tax. And it is compelling. If you're a libertarian, a true libertarian, you should be for a carbon tax. Property values are being destroyed by emitters. That's when a government is supposed to step up. Libertarians and conservatives should be for market-oriented solutions. So again, all those things that John just mentioned, that plethora of, and if we know those are inefficient regulatory interventions, those could be replaced with a carbon tax. So, and then if you look at states, things are more encouraging too, because governors and at cities, mayors, they can't debate forever. They're getting on with things. So I think we're getting close to potential opportunity in Capitol Hill.
You asked politically things happen when there's a deal. And when we can see, look, we're going to do something, even the skeptics, we're going to do something about it. Let's do something efficient. Let's get rid of the hated and inefficient crony capitalist regulations and subsidies on both sides, all this stuff that's very economically inefficient and not helping us to reduce carbon. Let's get rid of the kidding ourselves. Then sure, you can have the tax.
On the world stage, do you think that this kind of a deal could be struck?
No, I think here you have one of these very nice theological debates that the Americans are engaged in on this issue. Really, that's very interesting. Really, but libertarianism is very much, I guess, an American brand. Really, and so what really, again, every country will have its own way to handle the issue, and as you know, some Europeans, have a sort of weird and perverse love of regulations. So I guess that maybe we'll engage into this vice again. No, what is important is, in a sense, in Paris we want to have a common message. The message from the states, message from the cities and the local authorities, which is very exciting in this country, for instance, is that you go everywhere and a lot of local authorities are engaged into fighting climate change. Even the Republican cities, they don't speak about climate change, they speak about energy efficiency. And what they are doing, in effect, is going into this direction. You go also to the lab. You visit laboratories, and you are impressed by the fact that the technology is there, or it's very close to be there. It's incredible. Really, the energy storage, the batteries. It's really the output of this science is very impressive. And the fourth element for us, it's very important, is the business community. The COP21 will be business-oriented, business-friendly. So we expect in Paris a strong message coming from the business community. And I agree, I met people from Pepsi Cola, Coca-Cola, Walmart, Mars, Google, and others. And all of them, they are really taking seriously climate change, economy, energy efficiency, working with renewable energy. So the message is there, and we want to have, in Paris, a common message. We are serious about low-carbon economy. We have to work on it. And there is also the fact there is money to make. Go for it.
Well, and so that is something I want to ask. So climate change is going to produce a lot of opportunities, looked at crassly, I guess. Are businesses planning to make money from climate change, the businesses that you work with?
Right now they're making money from mitigating climate change. Okay. So they're starting with right now what they can do to reduce emissions, the leaders in this space, and they're finding business opportunity from that. I mean, everyone from Walmart, like you mentioned, making a commitment to 100% renewable energy, driving energy efficiency because it's cost savings, and that's the #1 place to start for all of these companies. So starting with energy efficiency in their operations, becoming more lean. Energy is a material cost. I used to work at Google, significant material cost. The company making those data centers as efficient as possible started way before there was any concern about climate change in that company. It was about making the data centers as competitive as possible. And then you turn to renewable energy because it's price stable. So Walmart is the #1 buyer of solar energy in the United States, second only to the Pentagon. And they're doing it for the financials of it. These companies are recognizing these are smart investments for their bottom line. They mitigate that price risk of the fuel prices of oil and gas and other sectors. We spent nearly an hour yesterday in the global energy markets discussion presentation talking about oil and gas and how much they're suffering and having a very difficult time at $50 per barrel oil, and in the face of about $40 billion a year in U.S. subsidies alone. That's at least 10 times what the renewable energy sector gets. Already, solar is growing significantly. In the last 4 years, investment in renewable energy was greater than investment in fossil fuel-based electricity. That's 4 years so far. It's now, solar's going to grow 10x in the next 15 to 20 years, according to Bloomberg. No other sector is growing at that pace. So as far as the business opportunity, the investment opportunity, the writing's on the wall. The only question is, how do we accelerate that to really mitigate the worst impacts of climate change? And so smart businesses, smart investors are turning to these sectors with the near-term business opportunities. But then you also have a group of companies who are looking at the adaptation piece. So companies like Starbucks and Swiss Re are seeing, Swiss Re is looking at it from a business risk, but also a business opportunity. Significant investments across their infrastructure, realize the impacts that they're facing for those investments, but also, of course, payouts in insurance.
So my job is to be the grumpy economist. Businesses are also very good at harvesting subsidies for doing things that waste a lot of taxpayer money and don't help the environment. I think in the economics of it, we have to face another unpleasant fact, the fracking revolution. Fossil fuels are going to be incredibly cheap for the next 20, 30 years. That's just a fact. And fossil fuels are very beneficial to many people. If you're in India and burning cow chips, fossil fuels are great. They're environmentally good for the environmental problems of someone in India. And I wanted to say something good about Europe. France, most of Europe doesn't have fuel economy standards, regulations. They said, we're going to put in a high price of gas. And not only do Europeans buy smaller cars, they also live closer to work. They carpool better. They do all those things that you respond to a price that people in the U.S. don't do because we don't face the price. We face the regulatory system. And France especially, France believes in nuclear power, one of the last places left on Earth, a completely carbon-free source of power that is scalable in a way that nothing else is. So
I would just say
don't sell Europe short.
Just the fracking piece I'd be cautious about, because yesterday's panel, and I've heard about this from a lot of analysts in the sector, they aren't surviving on these current prices of natural gas. So it's too expensive to do fracking. So they can't maintain. Those prices have to come up. They're going out of business. They're band-aiding themselves right now.
But the larger point is how do we make carbon-free energy more price competitive? Because it is going to have a lot of trouble.
Eliminate subsidies across the board.
Well, again, we can move on from the carbon tax, but that helps a lot. But I think the point about natural gas and fossil fuels in general is worthy of a little attention, too. So there are some folks now saying all those fossil fuels just have to be left in the ground. Environmentalists are sort of for that at the headline level, but it's really impractical. We have in the U.S. something like a 100-year supply of natural gas, likely thanks to horizontal drilling. And then a lot of the fossil fuels are in places like Kazakhstan, Iraq, Iran, China, India. Those countries might not be so persuaded by, say, our divestment campaign. So I think we need to invest in technology, carbon capture and sequestration technology. Everybody says about that, well, not everyone, many people say about that, especially environmentalists, oh, it'll never work, it's expensive. But that's what's been said about every technology that's allowed the big breakthroughs. The best example I know of is the 1970 Clean Air Act. I grew up in Cleveland. Although I was a young kid at the time, I remember how bad the air was getting, really bad. In fact, it was getting so bad, our Congress, believe it or not, heroically passed a law, the Clean Air Act, that required the automobile sector to eliminate tailpipe emissions, the bad stuff, by 75% from 1970 to 1975. The auto industry said it could never be done. And in truth, no one really knew how it could be done. But the air was that bad, we passed the act. And then lo and behold, right after that, the catalytic converter was invented because of that act. And that's why we have such clean air today. It'd be like China outside without that. We need carbon capture, sequestration, and other technologies because we keep discovering more and more fossil fuel. It's not going away. It's going to be hard to leave it in the ground. And some, the poorer parts of the world are probably going to extract it and use it.
So given it is going to be awfully tempting to pull it out of the ground, how do you convince businesses then to change up? I mean, is there a sort of a do the right thing sense about this? Because it can't all be economics, because it might not make pure economic sense.
Yeah, I think, well, a lot of it does. I think most of it, in fact, does make economic sense for global-minded, forward-thinking CEOs. So if you go through the annual reports of most big publicly traded companies, they recognize climate change. They disclose all the efforts they've made to reduce their emissions. They're good stories. Lots of companies, Microsoft comes to mind, has a price on carbon. So a lot of companies are doing the right thing one by one. I'm really glad in Paris a spotlight will be shown on companies. And I think my only challenge to these CEOs is they're doing the right things within their company footprint, but they're still too timid. I think they need to speak up and help environmentalists or economists argue for getting on with these policies that will let us address these risks right now in a cost-effective method. They'll be great fellow campaigners, and that's what I think we need to push them to do. And that's what I understand your plan is for COP21, which is great.
No, exactly. Really, when I saw the debate, in the state of Indiana about gay marriage, really, and the CEO reacting very strongly, I was dreaming they could react the same way about climate change. When you hear what some senator is saying, really, that's really mobilization of the CEO. But it's coming, really, it's coming. And I think they understand also it's good for their brand. It's good for the reputation of the company.
Absolutely.
But aren't there a lot of merchants of doubt who are going to make a lot of money on casting doubt on the whole notion of climate change?
Well, I'm the grumpy guy here. Voluntary efforts by large U.S. businesses are a drop in the bucket. China's what are they building? A new coal power plant every single week. China and India are growing. They're moving to fossil fuels. I think the spirit of this is that that kind of effort can help lead to a policy change,
yes.
but it's not by itself going to make a tiny dent in the
do we need a Manhattan Project to address climate change? I mean, that kind of
I just think that
national or global
overemphasis on research is understating what's already available right now that's cost effective, that we just need to accelerate the deployment of. And putting that price on carbon will change that calculation, and therefore it will accelerate beyond where we're already going. So as I've said, huge opportunities in solar and other industries already, but you put that price on carbon and it'll just make it go that much faster. And to the credit of companies, actually back in September, the World Bank had a group of 73 nations, over 1,000 companies representing 52% of GDP, 54% of greenhouse gas emissions, and half the world's population calling for a price on carbon. So this was the Carbon Pricing Leadership Coalition, and they're saying businesses can do they will do this, but we need that price on carbon. So you're starting to see those voices come out in real numbers now.
I have a question for Amy. Yeah. Can I ask a question? Here's what puzzles me about those companies, though. Like, I agree, they're doing a lot of good things, but most of them are members of the Chamber of Commerce. I have nothing against the Chamber of Commerce if you're here today. I'm sure it's a really worthy organization. However, when it comes to climate policy, they articulate some pretty retrograde points of view. And so you have CEOs whose companies are members of the Chamber of Commerce. The Chamber of Commerce is saying something that is 100% contradictory to what they've already said. So why don't those companies say, we resign the Chamber of Commerce, or at a minimum say, we're not going to resign because they do other good things, but we strongly challenge this point of view that, in our judgment, makes no sense.
Well, a number of them have resigned from the Chamber of Commerce. So I think it was Patagonia, Nike, and then others are raising their voices within that context.
I think these CEOs are too timid.
I agree with you. So I would say that it takes strong courage, and they need to be leading. And it's a time of moral leadership. Today, the Vatican is hosting a conference on climate change. The Pope will be providing his encyclical. It is a question of moral leadership. When you look at the impacts that are already happening to people around the world, incredible stories around the world, it's about responsibility. Once you know, you have to act.
So why are you smirking about when we talked about CEOs needing to exercise moral leadership? Do you think that just isn't going to happen?
It's asking CEOs to speak out politically in any country that's very dangerous. They have big companies at stake. They have regulators handling them right, left, and central. Yes, they can chime in on whatever the issue of the day is, but I don't think that's where we get our moral leadership from. You mentioned a Manhattan Project, and I think the sense that the rest of us are saying is that that's the wrong idea. Manhattan projects are great when you have one specific thing the government knows how to do and wants to build it, or moonshots. The way that energy works is there's 1,000 different little things that people could be investigating. No central national science foundation is going to figure out what the right technology is. The history of our governments, they wanted switchgrass, they wanted biofuels, they wanted synfuels. Every big idea that came out of the government has not worked. if you put the price on it, then the thousands of entrepreneurs go out and figure out how to do things, and I think that's going to be the answer.
So will that allow an 80% reduction in carbon emissions by 2050, which is what a lot of scientists say is needed? Will all of those efforts add up to that, or will it take some?
No, we're not clairvoyant, so you can't get carried away with predicting the future. But that tax, it might start at $16 a ton. It needs to grow. I mentioned, but maybe I mentioned it quickly, growing 5% a year till 2050. So that's rising fast. But that gives folks, clear warning. Start your transition, and it gives investors then back to these millions of R&D projects real incentive to invest and develop the catalytic converters we need to address climate change.
And we have
you said there were 3 legs of what we're supposed to be talking about, and mitigation was one of them.
Yes.
I think we need to face the strong possibility that even with a carbon tax, even with all this great stuff, the rest of the world is growing. The rest of the world wants fossil fuels. For the rest of the world, their environmental problems, carbon is about 5th on the list of their environmental problems. We may not get that 80% reduction that we're hoping for, even with the big carbon tax.
Okay, so in Florida, I think 1/3 of the population lives in 4 coastal counties. 6 million people live down there. The seas are rising. By 2050, you're not going to see a lot of Miami and Fort Lauderdale and all of those cities. They're going to be under the ocean. So if you have $1 to spend, is it better spent on carbon reduction, marsh repair, or building really tall levees and pumping machines?
All dollars aren't fungible, but I would spend the first dollar on mitigation, reducing carbon emissions, because adaptation is important. We will have to adapt to inevitable climate change. But the longer we wait to address mitigation, these greenhouse gases have a life of like 100 years plus. So the longer we wait, the adaptation hurdle just keeps growing. So it's going to obviously be a mix, but I'd say mitigation is job one. On adaptation, the only point I would want to pound the table on is we've learned a lot about how nature is one of the best tools for adaptation. So if you think about coastal risks from rising sea level and more storms, things like oyster reefs, marshes, mangroves are extraordinarily robust, good investments for dealing with that risk, and then you get a host of environmental co-benefits for free that go with it. And the good news is the science has really accelerated. And also good news here, this is actually working. Governments are being really rather sophisticated now when they think about their need to invest in risk reduction. It's a mix of gray and green infrastructure, and it's an encouraging story.
Mr. Ambassador, do you think that you'll see, if you were to pose that same question to the representatives of the different countries in France at the end of the year, what do you think, where would they spend their money?
What is impressive, for instance, going back to gas pricing, that the fact that some Chinese cities, are entering into gas pricing. The fact is that the human being, it's not because of climate change, it's because every day, they feel the result, the consequence of the CO2 emissions. As was said, simply you can't live anymore. Really in Beijing, the French diplomats, are sending back their babies to France because simply it's becoming impossible. And it will be the same in India. It's already the same in India. Actually, in New Delhi, the pollution is worse than in Beijing on some days. So sooner or later, the Indians will come to the same conclusion. It's for very concrete reasons. I think that all of us, every country now feel concerned by climate change. The small countries, the small island countries, they are sinking. Really, I was ambassador to the UN. The ambassador of Nauru was telling me, or the ambassador of Maldives, really saying simply, my country is sinking. We are really thinking of relocating the population somewhere else. And when you go to a large part of Africa, really the Sahel region, you see the way the desert is advancing, moving forward. So there are real concrete problems, so they feel obliged to react.
Well, and here we're sitting in California, where you're seeing some concrete problems with the draining of the, the aquifer in the Ogallala, and you're seeing the Central Valley sinking, and
I was just going to offer to build on that, the security implications of climate change impacts and what those costs are going to be. If we're talking about the cost of adaptation, we have to talk about the cost of the security impacts. General Chuck Wald, retired general, used to oversee our military operations in Africa, and he's talked about these points, these hotspots in Africa that are being exacerbated by climate change, and he used Nigeria as the worst example. We have 160 million people They're split geographically. The Muslims and Christians are separated. But as you see sea level rise potentially coming up the rivers, as you see the impacts of drought on then people are going to have to move, then it exacerbates these already pre-existing conflicts into real serious situations. And so we're not, these are those unpredictable, but actually quite predictable. We don't know where they will happen.
So where are
they
you
will
putting your dollar?
I'm putting my dollar first on nature. I agree with Mark. Looking at the analysis, when you look at things at how nature is just much more effective as an engineer, as a protector from storm impacts, as in sequestering carbon, nature is the best one to do that. So nature is the first investment. And then I think it's a matter of getting ahead of these issues. So you look at Miami spending $400 million a year to pump water out to keep itself from being impacted from sea level rise right now. That's not a smart long-term investment. That's not something that's going to continue to be sustainable financially. And so how do you think about the future and getting ahead of it before it's so much more expensive?
So I guess my job is to sum up as Mr. Grumpy. These costs that we've talked about are big, but on the scale of they're not actually that big. You know, Florida might have to look like Holland. Well, Holland's a pretty nice place. They put up a bunch of dikes. They live under sea level. It's costly, but it's not a catastrophic cost. $400 million? $400 million is a lot of money, but it's, you know, we're talking about hundreds of billions in costs.
One beach.
The puzzle is adaptation. Actually, there are, and I think these nature strategies are excellent ways to go about it, but they're not horrendously expensive. Beijing's problem. Beijing has a horrible environmental problem. It's not carbon emissions. It's particulates. It's sulfur dioxide. It's all the stuff that we cleaned up before we moved on to carbon. And security. So we think about the problems in the Middle East and Africa, and they have that is our national security risk right now. So where's a dollar best spent on addressing the threats out of the Middle East? Really, in cooling the climate 100 years from now? I mean, that's a level of sort of cause and effect. Where's the dollar best spent? That strikes me as a very weak argument.
But this is about an investment opportunity. So this is not an either or. So you can spend. So the government is the insurer of last resort. Actually, it's Hank Paulson in Risky Business. He talks about what's going to happen from climate change impacts. Who's going to be paying that money? It's going to be taxpayers. They're the insurer of last resort. That's who comes to our rescue in times of emergency. In mitigation, it's an investment opportunity by the private sector. This is not the government spending our tax dollars. These are investment opportunities to mitigate climate change and energy efficiency investments, renewable energy investments. So that's an economic opportunity. I would just argue you can't, there are different types of expenditures or costs. One's an investment with returns, and the other one is a cost on taxpayers.
You make arguments like the jihadis are after us because it's too hot. And the way to solve that problem is to cool down the temperatures in the Middle East. I mean, that just doesn't make any sense. So let's not make arguments.
Nobody say that, but we can say that if we the Europeans, if we have, you know, millions of people who want to migrate, you know, and who are hundreds of them, you know, dying in the Mediterranean Sea, it has something to do with the economic situation in Africa.
It's a civil war in Syria. It has nothing to do with the temperature.
No, I'm really sorry. No, it has nothing to do with Syria. The people who are trying to cross from Libya, it has nothing to do with Syria. They are coming from all over Africa, you know, really, and it's really migration, you know, really linked to of course, not only to climate change, you know, really, I'm not that stupid, but also linked to the economic situation all over the continent. And for Europe, for the Europeans, what is happening in Africa, it's totally critical in terms of security.
So we'll stipulate nobody is stupid, and that and that climate.
I think the grumpy economists took us down a dark alley. We're having this little debate,
yes.
but we already agreed we're for this aggressive carbon tax because it is a smart thing to do.
Yes.
And then per COP, if every country would have a comparable policy that would aim to reduce their emissions in that amount, we'd address these threats we're talking about. It's kind of a fake debate if we get on with job one.
Exactly.
Don't you agree?
I want to go back to the role of government here. So Hank Paulson yesterday said something like, the people who oppose government getting a solution because, you know, they're afraid of big government are wrong-headed, because in the end, it's going to be even bigger government that has to bail out these communities and countries when a crisis
We
comes.
already have bigger government. I'm glad you brought that up. If you add up, I mentioned this, if you add up all the regulations we have in the U.S., state by state and at the federal level right now, that's big government. It's taxes, it's subsidies, it's the new EPA rules. It's renewable portfolio standards. This is government intervening in a huge way. That's bigger than impact than a carbon tax, but it's invisible. It's both inefficient and invisible. Plus, a carbon tax could offset other taxes, which would be good for the economy. To me, that it's a no-brainer. If you're against big government, you should be for a carbon tax. That's small government.
So long
revenue neutral.
So long as it doesn't add to all the other
revenue
stuff.
neutral carbon tax.
What do you think businesses would say to this?
Absolutely. I mean, the businesses with whom I'm working are saying we want that price on carbon. They're frustrated that governments haven't gotten along with it. They know it's coming. They're already planning on it. ExxonMobil has an internal price of carbon of about $80 per ton, way larger than what governments are talking about putting into place. So these businesses are already there. They're just saying, get on with it. Give us that predictability. We're already making investments. We're just going to accelerate those investments. You'll allow us to go more quickly, drive innovation, cost savings, and benefit our brand. Those are the majority of companies, and more small companies are now finding these economic opportunities as they're starting to evaluate what they can do on energy efficiency. And someone asked earlier about leadership versus just making the green case to make the investment. And a lot of these companies, it was started by leadership. With Walmart, it was actually the son of the founder who said this is not consistent, this lack of environmental leadership is not consistent with our family's values. What can we do to lead on environmental issues at Walmart? They started looking at it and realized it was completely consistent with their bottom line approach, which is saving money. So started with energy efficiency. So often the question may come from a moral question, a leadership question. But when you dig into it, you can find those business opportunities from it.
So we have got a lot of business leaders right here in the room. Maybe some of you have questions about this issue or moral leadership or any of these other topics.
The ambassador said...
Oh, I'm sorry. Could you identify yourself, please?
Richard Tanger from Moody's. The ambassador said that a carbon tax, which others are proposing as the silver bullet, won't work in a variety of countries, perhaps in Europe or other things that we need. I wasn't sure why that is the case, so if you could explain that. And the second question, if you don't mind. We talked about mitigation, but there was also a discussion of adaptation. But I didn't understand, how do we create incentives to govern adaptation? Is that just one-off effort, or is there another silver bullet for adaptation around taxes or something?
Okay, let's take these one at a time.
No, first on the gas pricing, it will work. It will work in Europe. Actually, we have a system, but for the moment, it's a system in theory because the price chosen has no real consequence. So. You do know, in Europe, we are ready to go into gas pricing. But I guess that in other countries, 193 countries with very different economies, with very different political systems. So what we have understood is one size doesn't fit all. So in a sense, what we are asking to the countries is each country taking its own commitment, in a sense, on its own terms. Within its own political, social, and economic system. And I'm sure that some countries will not enter the game of gas pricing, but the Europeans are ready to go.
So on the second part of the question about incentives for adaptation, we talked about incentives for mitigation. What are incentives for adaptation?
Well, there's a lot of room for addressing and improving how governments respond to disasters. It's not really an environmental issue alone, but if you think about like something like Hurricane Sandy, the disaster happens and federal dollars show up and clean things up and help people. So states actually don't have that much incentive right now to do the right thing because they're expecting, there's a little bit of to break it down in the market, the feds bail them out. Insurance needs to be reformed. We have this crazy situation where people are insured to build homes in very risky areas. Those ought to be the areas that are turned over to nature to provide that robust protection. The predictable disaster happens, insurance payouts occur, people rebuild in those same places. There is the need for a lot of reform in disaster response in general, including in connection with climate.
Does our grumpy economist have a thought?
Oh, no, there's nothing in particular. I mean, these are smaller and local things, and this is a case where sort of science and best practices hasn't made its way to policy. We do have a problem in the way all of our governments work. Exactly. We pay people to build houses in flood zones, and then the houses flood, and then we pay them to rebuild houses in flood zones. Well, we have a politically responsive system. People want the money, but that's the kind of thing we got to fix.
So Hurricane Sandy, I think the latest figure that I saw, although all the figures are terrible, property damage from Hurricane Sandy was $65 billion, and now a lot of those houses are getting rebuilt. And what have we?
Well, it's a little better. Governor Cuomo and Mayor Bloomberg and now Mayor de Blasio. I'm most familiar with in New York. I think in Jersey and Connecticut this is happening too, but. The response is better than predicted. So Governor Cuomo had a fund to encourage people not to rebuild. He'd buy out at a good value if you wouldn't rebuild. And if the entire community wouldn't rebuild, there would be a premium to really incentivize an end to this crazy thing of rebuilding in bad areas. All those governments I named are getting very sophisticated use of green infrastructure to complement gray. And there were some really cool things like just by coincidence, the Nature Conservancy was involved in dune restoration in Cape May, New Jersey. Some of you probably know Cape May, lovely coastal community, really in harm's way in Hurricane Sandy. Lo and behold, and it was intended that the dune restoration, which cost like $7 million or something, would provide protection. It wasn't anticipated that a storm as great as Sandy would occur. Lo and behold, Cape May suffered very little damage from the storm. The dunes worked. And those kinds of anecdotes got the attention of government. So local governments, I think it's an encouraging story. They're getting smart. They're working with environmentalists. They're thinking about more practical ways of addressing these risks. I find it pretty encouraging.
Although if you go down to Miami,
well,
right
not
on,
all governments.
Right on the shoreline, you see incredible building. Yes, sir.
I'm not in business. Maybe that's why I'm a pessimist. I'm Peter Passell at the Milken Institute. If we've heard a lot of happy talk, and boy, I hope you're right. Let's say we're not, because that's really possible too. When do we start thinking about geoengineering, and how do we think about it? Who does it? How do we start the process, if there's to be a process at all?
If I can talk, I'm not sure I can get through my cough. I'm getting over a cold, and he has one. We're quite a pair over here. But
it's spreading. It's spreading. You know.
Actually, I was at when I was at Google. We actually looked at geoengineering and looked at the work of Latham and Salter, who are the professors who are advocating ships that would take seawater and spray the clouds to create more and increase reflectivity over our Arctic to help just keep the ice and that reflective nature of the ice to prevent the sea level rise that's coming from the melting of the ice. And that seems like the smartest, least potentially frightening version of geoengineering when you're taking water versus sulfates or other ways to make things more reflective. But we need a global treaty, a global process in place to make those decisions. We can't allow government to make unilateral decisions on geoengineering. And that's what I'm afraid of, is if we don't get ahead of geoengineering, we will have unilateral decisions in the face of the incredible impacts that we're seeing. And I don't mean to say that we won't have significant climate impacts when we talk about happy talk. No. The threats are there. We're already seeing the sea level rise. When you hear from the small island states, it puts a fire under you to get things moving much more quickly, and a great deal of frustration at Washington for not understanding the threats that we're facing in Washington and around the world. But we have to start this process. The National Science Foundation does have a research process in place for geoengineering, and the Royal Institute in the UK came out with a very comprehensive report on geoengineering and how to consider moving forward, both on the technologies but also on the decision-making process for global governments.
Sir?
There's been a lot of quality talk about a price on carbon and a carbon tax, but California, Quebec, now Ontario have gone to cap and trade. I wonder if you could compare and contrast cap and trade with your carbon tax thesis.
I'm sorry, could you identify yourself to it?
Able Verde Exchange Institute.
Yeah, so we've stated a very high level here about carbon tax, but there's lots of details about it. The important thing is, of course, a uniform price on carbon, that if you emit carbon, it's going to cost you X. And incidentally, if you can sequester some carbon, you get the X back. Now, how does that happen? The danger of a tax is that the minute it's called a tax, all of the special interests go to Washington and say, heavens no, we need a special exemption for this, we need a this for that, and so forth. So cap and trade and a tax from that point of view are the same. I think there is, I had a fun idea a while ago, which is property rights. The citizen has the right which he has to sell in order to get the carbon.
So everybody gets like pollution rights?
You have a pollution right, you have to sell. The advantage of that is it's the same way. It's a way of engineering what is the price of carbon. That way, every voter has an incentive to say, no, I want this tax uniformly applied, no exceptions. Because the climate doesn't care who sent the carbon out. If it's some politically favored person who emitted carbon or someone else, it's carbon's carbon. So there are, cap and trade has its problems, property rights have its problems, taxes have its problems. We've stayed at the high level, but that's not to say that there isn't a lot of implementation and considering the politics of keeping this thing going and not falling apart.
Mark, do you think that this has any political?
I agree with the grumpy economist. Cap and trade and tax are designed to have the reductions in emissions occur at the lowest possible cost in the most efficient way with the least amount of government intrusion. So then politics matters, which is an easier sell. We worked very hard on a cap and trade back in 2008. It passed the House, Waxman-Markey bill, failed in the Senate. At that time, the political conventional thinking was a cap and trade would be an easier sell than a tax. Now that thinking has flipped around. But they're designed to achieve the same things. We admire the California cap and trade. And the ambassador mentioned this too. You know, when we think about the global level, who cares how the emission reductions are occurred? I think a tax is kind of handy because all governments have to raise revenue. The revenue can stay within their country. And so we can take comfort from, you know, if the U.S. had the carbon tax we talked about, the rest of the world could say, hallelujah, the U.S. is finally taking action. It wouldn't be any of their business, the rest of the world, how we use that money. That I think has some political appeal.
And which you're exactly right, it has to be scalable. Because if we just do something in the U.S., I'm sorry, if China and India aren't along in the China, India, and Africa, that, you know, then we have done nothing. So we need. Sorry?
And China already is.
Yeah.
They're already putting, they have, what, 5 markets already with carbon trading systems in place?
In Brazil.
Right, but they are, these countries are the ones who are going to grow in terms of carbon, you know,
Absolutely.
much
They're
more than we are.
way ahead of us as
we
far
need
as
a system
putting a price on carbon in place.
And so there's this whole political thing that's going on about, oh, we have to get them to agree before we do anything, which I think we all disagree with. But whatever system gets put in place needs to have, you know, so the U.S. does it, that's sort of a moral leadership, and then the system has to work in the rest of the world, which I think is your good point. But
politically, it's very complicated, you know, because we have tried to, in France, to have a tax, you know, on the emission of the trucks. And the problem was, for geographical reasons, that the trucks coming in Brittany, in France, you know, which is an agricultural region, you know, they needed a lot of trucks simply to bring the produce from Brittany to Germany, for instance. So the tax actually was falling more on Brittany than to the rest of the country. The result was riots. The farmers were totally furious. And when you see also neutral tax, the taxpayer doesn't believe it. The taxpayer knows that he's paying a tax, but he doesn't feel that he is refunded. So politically, I can tell you, you know, we had riots, and at the end, we had to give up this tax on the trucks.
One idea has been to simply refund the carbon tax goes into checks sent
Yes.
out to and then they see it. I mean, so
maybe.
those are the kinds of considerations.
Like the Alaska Oil Program.
Yeah.
It's the fee plus dividend approach.
Sir?
I'm sorry.
Hi, my name is Matt Bogosian. I work in the Obama administration at the US EPA, and I'm glad to hear we have a consensus on a carbon tax. And my question is to all the panelists. We have a lot of CEOs and advisors, impact investors, I suspect, in the room. What is your advice to them when they get back to work next week? What can they do to move the ball forward? You know, with the White House, we're trying to do what we can to incentivize impact investment going into clean energy. We have a White House Clean Energy Impact Investment Initiative. As one way, you know, from our perch that we can get at it. But I'm curious as to what the panelists say on it.
Great question. Let's go down the line.
Yeah, I spend a lot of time on this because I used to be a business person. I think CEOs need to be encouraged to be bolder and longer term thinking. I'd start with I mentioned this, a lot of companies are already doing good things. They should be more visible about that. So if you have a price on carbon within your company and you think it's working, tell the world that. That's good to know. And then if you think ahead, if you're competing for the best and the brightest, I used to work at Goldman, that's what we always said. Well, young people today, I've got some kids, I know young people, they seem to want to work for companies whose values align with their values. And so you might have a real competitive advantage if you're more explicit about what you're doing. And then most importantly, use your business creativity. At the Nature Conservancy, we have great partnerships with companies that allow us to do things we could never do on our own. With Dow Chemical, we're exploring, and now we're talking to the EPA, instead of using scrubbers to deal with local ozone issues, do massive tree reforestation. With Swiss Re, how to give those insured parties that have intact green infrastructure that will reduce risk, give them advantaged pricing because they have that, because that could influence the market. With JP Morgan, we have an exciting impact investment initiative underway. But those, I could go on and on. All those companies are saying, we're doing these things because they make great business sense. It's not philanthropic or corporate social responsibility. What those companies each have in common is a CEO who is a little bit bolder to say, yeah, let's do this. It's not going to show up in the next quarter or even the next year, but this makes sense for a whole bunch of reasons. And it helps the environmental community enormously, because business is better than us at a lot of things, and 1 + 1 becomes, worth 3 or 4 or 5.
John, what's your advice?
A lot of get out of the way. So much of the inefficient regulation we were talking about, Mark was talking about, comes out of the EPA, sorry to tell you. Deregulate nuclear. We have a source of unbelievably carbon efficient electricity out there, if we would only let people use it. And there's a lot of government stopping things. One, for example, solar panels. We have import quotas and tariffs to keep Chinese solar panels out of the U.S. Come on, you want to save the environment? We want this stuff as cheap as possible.
I would just add that so on Google and Microsoft, I was at Google when we successfully advocated for going carbon neutral, and I also helped Microsoft roll out their global carbon fee. And at Google, when we made that decision, in part it was because we wanted to leverage the marketing opportunity to communicate to other companies, here's how you should go carbon neutral, why it's smart, and in your business bottom line interest, and that was thanks to the CEO leadership. At Microsoft, it came bottom up. So it was actually the environmental team who actually developed that strategy and made the case to the senior management that it would drive innovation and cost savings. And already in just 1 year, they put a global price on carbon, 110 offices around the country. They pay into a fund that's managed by the CFO, and then they can co-invest in renewables and efficiency and other things to reduce their carbon liability office by office. But just in 1 year of having that price on carbon, it saved them $10 million across the company. So there are some real business investment opportunities. As an individual, my family office, we divested from commercial real estate, which my family was in. We're now diversified across early stage solar companies, solar projects, and solar funds. And so yes, it's all solar, but it's diversified across the different asset classes. So everyone can take a different approach depending upon your investment strategy, but no matter what you manage, there is a business opportunity in clean energy right now. And if we have a price on carbon, it'll be even bigger.
Well, I think French CEOs.
We would want Paris to be a sort of loudspeaker for everything which has been done, which is done, by the local authorities. As you know, the state of Iowa, is 30% of its electricity is coming from wind. It's wind energy. And also that the CEOs could announce. There will be a summit in Paris on the 20th of May, business and climate change. We are going to open a platform where all the corporations, but also the industrial sectors are going, really to set their goals. So simply to send, as I've said, a very clear, a loud message. We are low carbon economy. It's our common goal, and to give credibility to that. We need the clear message from the business community. We need also a message of the technological solutions. So in Paris, there will be also an exhibition of technological solutions, so the corporations will be able to show what they are doing and what is really possible. I think it's a question of credibility. Really to have a common narrative to all the different parts of the human society.
So do you see a difference in how the CEOs from, say, France are using this opportunity compared to the United States?
No, I don't think so. In the Western world, I think it's something which is really widespread. And there is also, it's a question which has been raised also of the values of the young people who are young customers. Really, and we are, among the youth, the credibility, really the belief that there is a problem, the climate change is a problem, that's a problem that the humankind has to face. I think it's really widespread.
Sir?
I'm Lawrence Bender. Hi, I'm Lawrence Bender. I actually produced the movie An Inconvenient Truth, a few of you may have heard of. And so I have a question for John, the grumpy economist. So as they're producing all these coal-fired plants in China, hundreds of them, how do you think this carbon tax affects that? Because obviously, as hundreds more go up over the next few years, all the tax that you're talking about probably won't mitigate them. They'll be around for 50, 60 years. And even though they're paying for that tax, they're paying for that cost, it's still going to be there.
Yeah, that's where I was sort of sounding the alarm. Maybe all this stuff is not going to actually bend the carbon down. So, we can talk about a carbon tax in the U.S. and then we can hope it spreads around the world. And then China can, if China puts in their own carbon tax, then that will bend them away from coal towards other sources of electricity and even other fossil fuels, which are better, hopefully towards nuclear. But you're exactly right. That's where the really grumpy end of the climate discussion goes, that says, guys, it's not going to happen. The carbon's going to be there, so we got to start talking about living with it, adaptation.
But you don't think that even if the Chinese say don't act or keep building, that we should do nothing?
Oh, no, but this is a global problem, and if it doesn't spread to a serious reduction in the growth of carbon emissions, China and India, as they, electricity usage is a really good indicator of GDP levels, then the carbon's going to be there, and then we have to move on to the adaptation.
But the Chinese are building a lot of nuclear power plants, some of them French, by the way. They have taken very strong commitments in terms of renewable energy with the President Obama. So I guess that maybe they are going to build still coal power plants, but actually they are engaged into other solutions also.
And they're also ultra supercritical coal power plants. They're the most efficient plants, and they're shutting down the least efficient plants. They're taxing them at 150% in order to shut down those least efficient plants. When they get a mission in mind, they get it done in China. Did you have something?
Also, at some point, coal can be scrubbed and cleaned and captured and so forth. Now we're just down to money.
Got one here and one in the back, and then I think we're good.
Okay. Hi, I'm Mark Scotland, business owner from New Jersey. The most dangerous enemy of all is the one you cannot see. The carbon emissions, vehicles have gotten cleaner, clearly. One of the EPA administrators once told me the downside to that is there are emissions still being emitted from vehicles. One of the things that came out really well from the EPA was the onboard diagnostic system and that check engine light. Unfortunately, millions and millions of people ignore that light when it comes on. Are there any educational initiatives going on that address that?
Yeah, it's an interesting question here in California, because whenever I'm visiting here, I think of Google and all these exciting technology companies. And it does disappoint me a little bit that those guys are championing driverless cars. Driverless cars will be an improvement in a bunch of respects, but I wish that tech sector would rally around, more efficient modes of transportation, public transportation, make public transportation really compelling. I'll also note, though, back to the darn carbon tax, it's just it's too cheap to drive. Now, the good news is this is the expensive way of doing regulations, but the Obama administration's been on the case. So fuel emission standards are going to double to 50+ miles per gallon soon. That's real progress, but we're doing it in a really expensive way. But I hope business leaders with even more vision will help us revolutionize how people get around. There's that very cool Toyota car outside in the lobby that caught my eye. That, I think, is more exciting than a traditional car with no driver.
I think, could I say something about the efficiency standards in clean cars? It was a while ago. My daughter was 8. She turned to me after reading the newspaper and said, "Dad, if they just make..."
Wait, your daughter reads a newspaper.
Oh, yeah.
Okay, be still my heart. I'm so happy. Okay.
She turned to me and said, "Dad, if they make cars go 50 miles a gallon, won't people just move farther away from work?" And she has a point. California is a classic instance of that. We want everyone to drive electric cars, but then there's zoning laws in California that make it nearly impossible to live close to where you work. Less transportation is, rather than public or clean or check your check engine lights. And how does less transportation happen? Well, if the price of going to places is higher, and if you remove, we have these counterproductive laws. And we don't think that zoning laws have a carbon impact, but they do, because they force everybody to live so far away and commute every day.
And AB 32 does have some of those smart growth provisions within it. And also you have Ford Motor Company with its Megacities initiative, where they're actually looking at new business opportunities as a car company in megacity solutions that are multimodal transit systems. So some of the smarter car companies are getting ahead of it, just like some of the smarter energy companies are.
We're going to sneak in the very last question. Super short questions, super short answers.
My name is Michael Sterling. We work with pension funds, and it seems as if the use of carbon is going to continue in some form, and carbon capture and storage may be the way forward. And what are the panelists' thoughts for investing in that for pension funds and institutional investors? Thank you.
Every investment in that space has been very troubled. If you look at the first plants that were developed, Duke Energy with the Department of Energy jointly, the Wabash plants, I mean, they're very expensive. I think the challenge for that space is the siting issue. The cost is in piping that CO2 from where the pollution is to where it needs to go into the ground. So if we're really going to get ahead of this issue, we need to be siting the power plants near the geologic formations to address that cost challenge. That's fundamental, and we're not getting ahead of it. I mean, as much as people talk about carbon capture and storage, they're not making those planning decisions from a power sector perspective in places like China where they need to be.
Investment thoughts?
Well, I think Amy's right. It's early stage stuff. Again, it would be helped by the right regulatory policy. A severe tax would help a lot. I'm still optimistic. There are some interesting startups. You know, natural gas is a real place to focus. So we're kind of, I mean, not all environmentalists, but pragmatic ones are happy we have natural gas here now in the U.S. because if you address methane leakage and all the other risks, it's half as dirty as coal. So that's real progress. But it's still half, you know, that's still a lot of emissions. We have to do even better. So if we're going to take full advantage of America's natural gas resources and around the world, then some kind of sequestration initiative is really going to be important.
Okay, and that is where we're going to leave it. Mark, John, Amy, Mr. Ambassador, thank you so much. Thank you for coming.